Here's where it gets crazy. And where it gets crazy is if OPEC comes out and formally says we've decided to take oil in other currencies, and immediately, like that, the dollar hegemony is broken. For nearly 80 years, the only tier one reserve asset have been dollars and treasuries. So why would the most powerful bank in the world, the central bank or central bank, reclassify gold as the world's only other tier one reserve asset?
Hello and welcome to Commodity Culture Interviews, where we seek to give both new and experienced investors an overview of the commodity space. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is a respected analyst in the precious metals space, a reputable speaker on economics, global investing, and foreign currencies, and the CEO of Miles Franklin Precious Metals Investments. Very excited to have him on the show, Mr. Andy Schectman. Welcome to the program.
Good to be here. Thanks for having me, Jesse. I appreciate it, bud.
Absolutely. So let's get started, like I always like to get started, on your own journey into investing. How did you begin, and what specifically drew you to the precious metal space?
Well, I guess you could say my company is somewhat emblematic of the American dream. I mean, as crazy and corny as that sounds, I went to the University of Minnesota in 1989 with hopes and dreams of playing baseball before I hurt myself and tore up my knee. And that ended any aspirations I had of being a baseball player, and started a company with my father as a 19-year-old, and on a wing and a prayer. Without getting into the deep roots of how we came to actually start a precious metals company, let's just simply say that it was a wing and a prayer. My parents sold their life insurance policies. My dad's middle name is Miles, and he borrowed $60,000 from his childhood friend whose middle name was Franklin. This was before the internet, before email. And on a wing and a prayer, we made it fly. Here we are 33 years later, having done almost 7 billion in sales without a customer complaint, maintaining an A+ rating with the Better Business Bureau, and being one of only 24 companies the US Mint has ever approved as an authorized reseller. We're really very proud of our reputation and how we got here. But in reality, it was the furthest thing from my mind growing up. It just happened, and it has been the most rewarding part of my life. For 33 years now, I have been at the helm of a precious metals company that I believe has, without question, the best reputation in the United States. And so we're certainly proud to be here with you talking, and given the opportunity to chat a little bit about who we are and what we do. So, I guess it just one of those things in life where we just fell into it more than anything, and glad that we did.
Well, let's touch right now on the state of the world and how precious metals might play a role where we are now and moving forward. Because obviously there's a lot of insanity going on. Monetary policy is just insane. Money printing is out of control. Central banks are, dictating all sorts of policies that are not necessarily in the best interests of the citizens of the world. And the fiat money system, many people say it's crumbling. Many people say it's falling apart. Do you see it that way? And how do you see precious metals playing a role?
I do. And I see precious metals playing a very, very, very significant role. And I think it's only fitting to talk a little bit about that. We go back to April of 2019, and what we see is the Bank of International Settlements reclassify gold as the world's only other tier one reserve asset. And this is a really big deal, Jesse, because since the end of World War II, the dollar and US treasuries have been the only tier one reserve asset. And this is what's considered a riskless asset by central bank standards. And so when central banks would trade with one another, it would have been dollars and treasuries that would have been used not only for settlement, but also for collateral, as they were considered riskless. Gold had always been considered a tier 3 asset for years and years and years and years. And what that really meant was that only 50% of the value was able to be calculated on a balance sheet. So, for many years, the central bankers were selling gold, and I could see why. I mean, it's tier 3, meaning only 50% is calculated. So that affects your ability on your balance sheet to make loans and to do international business. Also costs money to store it, paid no interest. So the new kids who would take over for the gray hairs in the central bank arenas would look at gold as archaic and a relic, and why would we need it when not only it costs money, pays no interest, but the 50% haircut on the balance sheet denigrates the ability to transact and to write bonds and to do things off your balance sheet. And that was until 2019, when the Bank of International Settlements, which is the central banker's central bank in Basel, Switzerland, reclassified gold as the world's only other tier 1 reserve asset. So let me just say that one more time so people really understand the significance. For nearly 80 years, the only tier 1 reserve asset have been dollars and treasuries. So why would the most powerful bank in the world, the central bank or central bank, reclassify gold as the world's only other tier 1 reserve asset? Now, if you go 2 years behind this to 2017, what you saw was the beginning of massive acquisition and repatriation of gold by the central banks from places like the New York Federal Reserve and the Bank of England. They were repatriating their gold, and they've been accumulating it ever since. So the first pillar that I would like to put into place here, do I see it playing a role, or what role do I see it playing? I see it playing an incredibly significant role, and it is because of its reclassification as the world's only other tier 1 riskless asset. So in other words, why did they not make it special drawing rights from the International Monetary Fund, or euros or yen, or yuan? Instead, they chose gold. And so I look at, first and foremost, gold as a very, very important pillar in what is coming next. Now, when you first asked me about, how did I get into this business? One thing I forgot to tell you was that when my father and I started the company as a 19-year-old, he told me that there'd only be one rule, and that one rule was enough for me to be fired if I didn't follow it. But that was the only rule. And figured I could deal with that one rule, whatever it was, but that one rule was that I would buy something every 2 weeks. That's the only rule. Great, I can deal with that. And so for 33 years, even though I own the company and the president not going to fire me anymore, I've bought something every 2 weeks for 33 years. So the foundation from what we talk about today should be that gold and silver is not an investment. To me, it's wealth. I've been accumulating wealth every 2 weeks for 32 years, wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, and every pandemic since the beginning of time. So with the understanding that, to me, gold and silver are wealth, and now the central banks are telling us that it is riskless and tier 1, to me, what gold is historical, generational, building block wealth. And I think the central banks are looking at it this way too. And if we move forward from that 2019 decree, we see massive acquisition by the central banks and by the commercial banks, and using the levered futures price of COMEX to control the paper price, which enables them to run cover for their acquisition. But, any discussion about where gold fits and how this all plays out has to start with the simple question. And Jesse, it blows me away, brother, how many people I ask this question to every day. And I'm telling you, if I have 1 or 2 people out of the last 200 who've gotten it right, it would be a lot. When I ask the question, you don't need to answer. I'm just going to ask the question in a very hypothetical way, and then I'm going to answer the question. The question is, what makes the dollar the world reserve currency? Because really, this is the crux of everything that I have been talking about now for the last few years. What makes the dollar the world reserve currency? You see, prior to 1971, since the end of World War II, gold was back, or dollar, excuse me, the dollar was backed by gold. Now, when Nixon confiscated gold in 1933, his first official act in office, he confiscated it from the people. But what he did was, when at the end of the war, the president or the Fed or the administration said that to all the countries, you peg your currency to the dollar, and the dollar will be backed by gold and redeemable for gold at a fixed rate. And that was the case all the way up until 1971. And that was because President de Gaulle from France proved that redeemable currencies get redeemed, or convertible currencies convert. Let me explain. He realized that there was more money being printed and treasuries being created to finance the Vietnam War than admittingly we thought, or they thought we had at the Treasury and at Fort Knox. So he sent warships over to New York Harbor filled with dollar bills to convert for gold. And towards the tail end of Vietnam War, he bled down half the gold held by the US. And so Nixon closed the gold window in 1971. At that moment, the dollar was no longer backed by anything. It was truly fiat. So it was that way until 1974, when an action happened that once again made the dollar the world reserve currency. And that action in 1974, and by the way, just to clarify, when Nixon closed the gold window in 1971, he said to the world, you can no longer redeem your dollars for gold. And when to the world, I meant to the other governments of the world, to the president of France or the king of England or any of the other governments out there. No longer could you redeem your currency. You could not convert it to dollars and then convert your dollars into gold. And so we became completely fiat, backed by nothing. 3 years later, Henry Kissinger flew to Saudi Arabia and struck a deal with the Saudi government saying that we'll protect you, we will provide you joint military cooperation. And it is that protection exclusively of the Saudi kingdom since 1974 that has given the dollar its world reserve status. All right, so far in this story, we have a dollar that is backed by the protection of the Saudi kingdom, giving it its world reserve status, and gold levitated to the only other tier 1 reserve status in the world. The day we left Afghanistan in September of 2021 in a very unharmonious way, and I've been screaming in every podcast I've done since this day, something happened and changed, I believe, the fate of this country forever. And I think there's no coincidence in the announcement coming the day after we left Afghanistan with our tail between our legs. And that announcement was that Russia would now protect Saudi Arabia in what was called a joint military cooperation agreement. And the same thing the next day with Nigeria, the two biggest OPEC producing countries in the world, were now being protected by a nuclear power, Russia. And so when you realize that it's the dollar or the US protection of the Saudi kingdom exclusively, and for that protection, OPEC agreed to sell oil in dollars globally for the last 50 years. It's that protection of the Saudi kingdom that has given the dollar its hegemony, its world reserve status. And now all of a sudden you got Russia kind of muscling in. And, you know, we talk about Nigeria being the second largest producer. They're also part of the Belt Road Initiative, another big piece of the puzzle. A lot of people don't know about this. It's because our media sucks. Our media doesn't tell us important things like gold's reclassification, like Saudi Arabia signing a joint military cooperation agreement with Russia and Nigeria doing the same thing. They don't tell us that China has embarked upon the Belt Road Initiative, the most ambitious infrastructure project in human history, connecting 75% of the world, 75% of human population in this infrastructure project, which is creating roads and bridges and maritime channels. And these pathways will only be patrolled by military and commerce. And it is the Panama Canal on steroids, and the US isn't part of it. So not only are all of these contracts settling in the new Chinese digital yuan, over 8 billion in transactions, have already settled on this new digital yuan over the last year. But it's connecting 75% of human population in Nigeria is in this Belt Road Initiative. So by default, not only is Russia protecting Nigeria, but so is China. So you have two nuclear powers protecting China and one protecting Saudi Arabia. But, you know, and I screamed, this is really big. This is a bad deal. Well, now Nigeria has gone as far as agreed to sell their oil to China for yuan, as has Saudi Arabia. They are now in formal conversations with Saudi Arabia for all sorts of unilateral trade agreements, usurping the dollar. We know that Russia's doing this already with China, and they just signed a big contract with India to sell arms for rupee and ruble. You see, the biggest issue of all of this is not the horrible performance of the markets, which we'll talk about in a minute. It is that you have an inverse relationship between a rise in interest rates and the health of the United States economy. Stocks, bonds, and real estate at all-time highs, driven to all-time highs through massive money creation. Over 60% of every dollar ever created in the history of the United States has been done since 2020. All of that money blowing up asset prices, stocks, bonds, and real estate to all-time highs against the all-time lows in interest rates. And as interest rates rise, we'll talk about the Federal Reserve's half-hearted attempt to actually raise rates, if you'd like. But as they do rise, everything collapses. So I think it's important to talk about the Fed in a minute because they can't do anything. And if they do, they blow everything up. So how about create a villain? How about weaponize the dollar? Tell the Russians you're out of SWIFT. Everyone on the planet, whether they're saying it or not, is thinking, geez, I don't want this to be me next. Thinking of these sanctions that the West can put upon them. So we weaponize the dollar, we kick Russia out of SWIFT right into the open arms of the Chinese, who have created the CIPS system, the cross interbank payment system, and mirrors the SWIFT. They have the Shanghai Gold Exchange, where all of these contracts that they are purchasing energy with with yuan, it's in a yuan denominated bond called the Chinese Petro Yuan bond. And that bond is immediately convertible into gold on the Shanghai Gold Exchange. They have a huge infrastructure that they are creating outside the country. They already have a massive one within it in terms of ghost cities and massive manufacturing hubs. And now they're building the largest infrastructure project the world has ever seen outside of it, connecting it all to the new digital yuan, usurping the dollar. Do you see all of these pieces being put in place, sidestepping the dollar? Here's where it gets crazy. And where it gets crazy is if OPEC comes out and formally says we've decided to take oil in other currencies, and immediately like that, the dollar hegemony is broken and the dollar collapses, because every country on the planet that's had to own dollars, well, let me rephrase that. Every country on the planet that buys oil, which is every country on the planet, has had to have dollars because that oil was exclusively sold in dollars. If that changes, which it is changing right in front of us right now, but if it really changes and you see OPEC say, we'll take other currencies, and the currencies dump, the dollar dumps, and they all come home because now you can buy oil in other currencies, maybe even their local currencies, and the dollar dumps. What happens? The dollar comes home and collapses, massively spiking interest rates. And as that happens, stocks, bonds, and real estate all immediately evaporate, collapse. There's your great reset that Klaus Schwab talks about, which I always thought was impossible. But you have the four pillars of wealth in this country immediately all collapse: dollars, stocks, bonds, and real estate, as they're all inversely correlated to a massive rise in interest rates, which the Fed can't do. So instead, there's a villain. It's the Saudis, it's the Chinese, it's the Russians, and the BRICS nations who have reacted to the weaponizing of the dollar and the pushing of the Russians out of SWIFT, and are building an infrastructure, I believe, that will completely replace the dollar as the singular world reserve currency. Even our Fed chairman came out 6 weeks ago and acquiesced the fact that there's room for more than one world reserve currency. So when we talk about how important owning precious metals is, I don't think it's ever been more important. That is the foundation from where everything that we talk about should emanate from, as far as I'm concerned, and that is the dollar losing its hegemony, losing its singular petrodollar status. And you can see it happening right in front of us right now.
Wow, that was an amazing breakdown. Let's touch on the Fed a little bit more because, I mean, to me, they're just a parasitic criminal cartel. And I'm wondering, there's talks out there that maybe this is being engineered. You know, some people are just saying they're idiots. They don't know what they're doing. I mean, when you just watch a press conference with Powell, it's like he's just saying nothing the entire time, talking in circles. Do you think there could be an economic collapse that's being engineered by the Fed and you know?
That's kind of what I was just getting at. So, all right. You have to think of the consequences of pushing the Russians out of SWIFT. And you push the Russians out of SWIFT and you are incentivizing all of our foes to think, am I next? China, for sure. Are we next? After, you know, are we going to try to go back and take Taiwan, which we believe is ours? Are we next? So you weaponize the dollar, you push everyone out. But before you do that, you create massive amounts of currency units over the last few years and tell everyone to stay home. So they're not being productive, and you create copious amounts of dollars. In Austrian economics, this would be called the crack up boom, where you have massive creation of credit, extension of credit and creation of money, which creates distortions and misallocations of resources and distortions in prices. Look at the prices of everything. They're all distorted. Everything is distorted. So you have all of this money blow up, creating all-time highs in all these markets. And not only that, those low interest rates incentivize debt. So you have everyone in debt and very little in the way of savings. In fact, savings right now are at a 9-year low, and we're very, very close to an all-time low as the cost of inflation continues to erode people's purchasing power. But, you know, the Fed talks about, well, we're going to get tough on inflation, right? So, I mean, how can the Fed get tough on inflation? Because if they raise interest rates, then everything blows up. And, you know, they talk about, well, you know, we raised interest rates 50 basis points. 100 basis points is 1%. So if you have inflation at 9% and you only raise rates 50 basis points to 75 basis points, you're still negative 8.25% real rate. In other words, the nominal rate of the federal funds rate is 0.75%. You have 3% on the 10-year treasury. You have inflation at 9%, and the core CPI inflation numbers strip out food, energy, and housing. The real inflation numbers are double digit, closer to 18% than to 9%, but even using their bogus 9% CPI, if they're really getting tough on inflation, then why the hell do they dick around with a 50 basis point rate hike? Why not raise it 500 basis points to 5% or 600 to 6%, like Paul Volcker did in 1980 when he raised the federal funds rate to over 19%. In order to get equilibrium, you have to have rates equal to inflation. There's your equilibrium. And the Fed keeps talking about this equilibrium at 2%. Well, that's crap. It's not at 2%. That was equilibrium was at 2% when they couldn't even get inflation at 2%, even by their mismanaged and misguided CPI numbers. But their own numbers are at 9%. So if they raise the rates to 0.75%, they're way too little and way too late. And then they talk about, well, we're going to sell $80 billion off of our $9 trillion balance sheet, which was $800 billion in 2008, and now it's over $9 trillion. And selling 60 to 80 billion a month in June. Why wait till June? Why not do it today? Why not do it last week? What the hell are they waiting for? Because they know the economy can't handle it, because a rise in rates collapses everything. And, you know, every time we've seen problems like this, the Fed has come in and lowered rates. And so let's look at the performance of the market. You got the S&P 500 down nearly 15% over the first 4 months of the year. That's the worst 4-month period in the S&P at the beginning of the year since 1939, the Great Depression. And those numbers aren't even adjusted for inflation. You got the Russell 2000, which is a more broad measure of the economy, is down almost 20% for the year and almost 30% from its high last year. And again, this index doesn't have many of the big multinational companies. It's more reflective of the economy at large. And then you got the NASDAQ down over 10% for the month, which is the worst month since 2008, but down over 21 or 22% since for the year, which is the worst year since its inception in 1971. As I mentioned earlier, you got savings at a 9-year low and disappearing almost to an all-time low as inflation creeps up. And how about the stocks that most of the people own? FANG, you know, the Facebook, Amazon, Netflix, Google, they're all way, way off. Amazon, last time I looked, was down over 35%. Facebook down almost 50. Google down almost 25, and Netflix down 75% from its peak. So, you know, you got rates going up, you got stocks falling, you have a negative 1.4 GDP rating on tick on the first quarter GDP number. So the economy is contracting, and they're going to come in and tighten. They're going to sell off their balance sheet. They're going to raise rates. No, they can't do it. They'll blow everything up. So when you talk about could it be engineered? Yeah, here's how you do it. You blow up the economy's money supply, where 60% of every dollar ever created in the history of the United States was done in the last 2 years. All asset prices get jacked to the moon in the face of super low interest rates. And then you come in and you create a villain, and that villain is Putin. It will be the Chinese and the Saudis. You incentivize them into finding alternatives to the SWIFT system because you've sanctioned them and you've blocked you've taken the oxygen away from their ability to breathe within the financial world. So now you incentivize the BRICS nations, Brazil, Russia, China, India, South Africa, and many other countries who say, screw the US and their sanctions and their hegemony, and the fact that they're destroying their currency and that they're paying real negative return on their treasuries. We're out. Let's find a new solution. And when that happens, when OPEC says, bang, no longer just taking dollars, we're going to take other currencies, and the dollars come flooding home. Remember, there's only 1 billion or so people in the West and 7 or 8 billion outside the West, and they all own dollars to buy oil. And if those dollars come flooding home and interest rates spike like that, everything collapses. There's your great reset. Not just stocks, not just bonds, not just real estate, but the dollars too. Everything in the US monetary sphere collapses, and the blame goes then elsewhere instead of being directed at the Federal Reserve, who's created this monster. And I think if you want to talk about engineering something that creates the Great Reset, that blows everything up and deflects blame, that's how you do it. If you were to ask me to make a movie and give me the screenplay and stop right after Saudi Arabia signed a joint military cooperation agreement with Russia after 50 years of it just being us protecting them for that dollar hegemony, done deal. And the next day they do it with Saudi Arabia, with Nigeria, and now they're actually doing it, selling their oil for yuan. Belt Road Initiative, Tier 1 revision of gold. All of the pieces are being put into place to usurp the dollar. And what do I see happening ultimately? I see the BRICS nations, who have massively been accumulating gold, especially China, Russia, India, using the back end or piggybacking on top of the new digital yuan, which has already done over 8 billion in transactions since 2021. On the Brick and Road Initiative, connecting 3 out of 4 people, all human populations, 75% of it is on this new Belt Road Initiative, and you're getting more and more countries signing up to it, and US isn't part of it. They'll use this digital currency They will open up their books and say, here's how much gold we have. We're all joining, coalescing and joining together. And we're going to issue a gold-backed digital currency with the veracity of the gold being held, denoted on, and the immutability of it denoted on a distributed ledger. And look, the Chinese have used it now for a year or 2 years without any problem. Now we're going to make it a BRICS currency, and you can see it's pegged. Now they're not going to make it convertible, because de Gaulle proved that convertible currencies convert, but they will peg it, and they will use distributed ledger technology to show the veracity of it. And like that, the dollar's done, just like that. And that's what I see if you talk about an engineering of blowing up the system, because the Keynesian system, which is based upon debt and consumption and taxation and spending, has reached its end. And the Fed has no more tools left in the toolbox. You can't bring the world reserve currency nominally negative, meaning pay a negative return. They're paying a minuscule positive return of 0.75% on the federal funds rate, but inflation is 9%. So the real return is negative 8.25%. So the point of it is, if the world reserve currency goes nominally negative, it's over like that. But so they've run out of tools, they've run out of options. And this is where you get a guy like Klaus Schwab saying you'll own nothing and you'll like it, because if everything blows up the way that this could, if that happened very quickly, this wouldn't be a slow bleed. This would be bang, because every country would start to be like, holy shit, they're all selling dollars. We better sell now or it's going to collapse. We're going to lose everything. The foundation of every currency on the planet is dollars, because dollars are what you need to buy oil. Every country has them. And if they all start selling them as fast as they can, those dollars come home creating wicked hyperinflation here. You think inflation's bad now, wait till all those dollars come home. And when that happens, the market, not the Fed, the way it's supposed to be, will push interest rates to the moon. Interest rates are not supposed to be controlled by a half a dozen, fat bankers. They're supposed to be controlled by the market. And when you see the dollar collapsing, interest rates will go to the moon. And when that happens, stocks, bonds, and real estate collapse along with the dollar. So if you want to talk about an engineered destruction, yeah, and it's in the hands of Saudi Arabia, China, and Russia, and India, and they know it. If they go that route and say, bang, we're no longer just exclusively taking dollars globally for all of energy settlement, it's over. Overnight, it's over. And so, yeah, could it be? I hope not, but it sure seems that way to me.
All right, so that was one of the greatest and most detailed explanations for why precious metals are so important in the world today. So I want to ask you about the difference between gold and silver. You spoke a lot about gold, but not so much about silver. What's the difference between the two? I know silver is more of an industrial metal, but do you see them both equally as monetary metals, or do they play different roles?
I think it's the duality of silver that gives it what I believe the value proposition of a generation. Look, if I had a gun to my head and I had one choice, I'd buy gold. I'd buy gold because it is the only tier one asset in the world other than US dollars, which seems to be on the way out. The central banks are copiously accumulating it. It's been wealth for 5,000 years. With that being said, there is a 90% correlation throughout all of time in the way that gold and silver move together. They are not always perfectly symmetrical in their movement, but over time, as one goes, so does the other. Typically, gold will move first and silver will move further. But the duality of the demand in silver is what makes it truly unique. And we can talk about other factors too, but first and foremost, when you talk about a commodity, it typically has one use. And silver is unique in that it has two massive uses. On one hand, you have a world that is moving increasingly digital and green. And when you are talking about battery powered vehicles, where almost every auto manufacturer seems to be forgetting that the combustion engine is a mode of transportation, and they're moving into all battery powered vehicles. When you see the need for solar power and wind power and digital, remember the Belt Road Initiative, connecting 75% of human population digitally as well. The need for silver is extraordinary, and it is growing. Forget about the fact that we lost the majority of the photography uses of silver. It is used in just about anything that conducts electricity that is digital. It is used in iPhones and iPads and flat screens, and it's used copious amounts in batteries and in solar panels and all of these things. It's used, there's 500 ounces used in the tip of every Tomahawk cruise missile. Silver is an asset that is massively used in industry and growing with a whole new host of uses, primarily in green and digital applications. But then you have a monetary renaissance that has happened in silver over the last couple of years, where we did over 500 million in sales last year, 97% of it being in silver. The real demand has been in silver. So you have monetary on one hand, industrially on the other. That's very unique to find a commodity that has duality in demand. You talk about the fact that silver is found in nature in a form called epithermal, which means it's found very, very near the surface. The big deposits were found decades ago, even long before the advent of advanced imagery. And so what you have happening is the big deposits are gone. You have to dig further. You have to explore more, so much so that only 30 to 35% of all the silver mined today that comes to market, roughly 800 million ounces or so per year, comes from primary silver mining companies, companies that just specifically are chartered to mine silver. So out of 800 million ounces, call it 250 million come from primary silver mining companies. The balance, 70% of that, over 500 million ounces, come from byproduct mining of other metals where they just stumble across silver. So it's disappearing in nature. And the reason that everyone is so interested in silver right now is because it is being held down on COMEX. The price is being manipulated by a handful of commercial banks. And I can show you how that happens. Before we talk about the grand conspiracy, it's fair to note that JP Morgan paid a $920 million fine to the Justice Department last year for manipulating the silver market. So, I mean, it's real. But when you talk about the reason people are so keen to it is that if you go back thousands of years, you'll see a 16-to-1 ratio between gold and silver geologically, where there's 16 ounces of silver in the ground for every 1 ounce of gold. And that ratio is consistent for thousands of years. We get to the Industrial Revolution a few hundred years ago, and we see that change where the average ratio since then has been roughly, call it 42-to-1 on average, 42-to-1. Right now, it's about 83-to-1. And this has only happened a half a dozen times in human history. This is an anomaly in price at 83-to-1. And I have a friend, his name is Keith Newmeyer. He's the CEO of First Majestic Silver. I had dinner with him in Las Vegas less than a month ago, where for the third time in the last year, I've asked him, now I just want to make sure I'm hearing this right, what's it coming out of the ground at? Because I asked him on an interview last December, I said, Keith, what do you make of this ratio north of 80-to-1? He says, I don't even think about it. It's kind of caught off guard by that. I'm like, why not? Everyone's talking about it. He says, well, it's priced at 80-to-1, but I think of the mining ratio, and it's coming out of the ground right now. It's 7-to-1 globally. So you have an asset that is expanding tremendously in its uses, but diminishing greatly in its availability. And so when it's coming out of the ground at a 7-to-1 ratio, meaning 7 ounces of silver are mined for every 1 ounce of gold, yet it's priced at 83-to-1, you could argue it's 12 times undervalued to its real fair price. You can look at it as the value proposition of a generation. The real question is, why the hell is a bank like Bank of America short over 1 billion ounces over a year's worth of production? Why in God's green earth would they do that? Unless they were being told by maybe the US government to violate all sorts of futures laws and antitrust laws and manipulate the hell out of the market through concentration and tell the lame CFTC, the regulators, to look the other way. Because there isn't another commodity on the COMEX market that is as heavily concentrated than the silver market. So you have a couple commercial banks distorting the price, yet the demand for the physical is off the charts. And it's becoming harder and harder and harder and harder to get. And I think when you look at manipulations, you can see it's overt as hell, and they're doing it for a reason. But all manipulations fail when done for impure reasons. And the only way that you can manipulate a market over an extended period of time is to push it in the direction that it is going. But you have a global awakening to inflation. It's not just here in the US. You have inflation as high as it's been since World War II throughout most of Europe and Asia. You have all of these countries seeing what's happening with Trudeau and with sanctions against Russia. Are we next? You have people awakening to the fact that fiat currency and Keynesian economics is on the way out. And all of a sudden, you have more and more people looking to protect themselves at a time when supply is becoming much more difficult to get, at a time when we are transitioning into all of these applications industrially that will need silver. So it's not a free market. It is manipulated market. I believe that manipulation will end very badly for those manipulating it. And I look at silver because of its 83-to-1 ratio and coming out of the ground 12 times less than that as really the value of a generation. And I think that if you're looking to really kill it in precious metals, it's in silver. Now, what happens if that ratio corrects? I would say convert it to gold. In other words, you could make the argument that if you had an ounce of gold right now, you'd be better off trading it for roughly 80 ounces of silver because it's an anomaly. And when the ratio corrects to its 200-year ratio of 40-to-1, you just go back to gold and double what you started with. What if it goes to its geologic ratio, 7-to-1? That 1 ounce of gold would return to 12. Is that crazy? No, it's not. In fact, I started doing podcasts in 2010, Jesse, and then it was because of this ratio. I woke up one day to see the ratio at 85-to-1. It was the second time in human history it's ever happened. And I'm like, I got to start telling people this. So I get out, first I call all my clients. I say, trade me your gold for silver right now. And then I start doing podcasts. You can search them. You'll see me, 2010. Within 7 months, you had $50 silver and $1,915 gold. That's 37-to-1. Anyone who would have traded at 85-to-1, 7 months later could have switched back at 37-to-1. And if you would have switched back, you would have made almost about 2.5 ounces of gold for every one that you traded 7 months earlier. And I think ratios and mathematics are very hard to beat. I mean, you can't run from mathematics, and ratios are there for a reason. And when you see an 85-to-1 ratio, that's 4 feet of snow in the Florida Keys in July. And if it snowed in July in the Florida Keys, the residents aren't going to run out and buy snowmobiles the next day. They'll know it's an anomaly. Same thing here. It's an anomaly in price. Silver to me is the value of a generation, but in the end, I believe gold is the place to be. Now, if you were stuck with silver, you said, what's the difference between silver and gold? Silver is a substitute for gold. It just takes more of it to buy gold, but they're both wealth. They've both been considered wealth for over 5,000 years. And, you know, the reason maybe the central banks hoarded over silver is that you can put $1 million worth of gold in a briefcase and sprint to your car. $1 million worth of silver, on the other hand, you know, it's going to weigh a few thousand pounds. And so when you talk about logistics and practicality and all of these things, gold has a more practical use case for it. But when you talk about uses, practical uses for silver in an industrial application, along with its monetary renaissance, there are very few things in the world to me that give you the value, the potential that silver does. And if we're in a football huddle right now, I'm the quarterback and telling everyone which way to run, it would be trade your gold for silver and switch back to gold when, you know, when the ratio corrects. Now, sometimes the defense intercepts. Sometimes the plays don't work out the way you want it to. And the worst thing happened is you're stuck with a bunch of silver. So what? It's been money, probably considered money longer than gold has. They've both been considered wealth since the beginning of time, but silver is money and it has great utility, and anything is better than being fully invested in dollars and dollar-based assets, which are coming, I believe, ultimately under great pressure.
So what do you think about investing? Obviously we've talked a lot about gold and silver and specifically bullion, whether that be bars or coins is obviously the best way for most people to get their hands on it. But what about other investment vehicles like ETFs, both the ones that track the spot price like PSLV or ones that hold a diversified basket of miners? Do you think it's worth exploring those options as investments as well?
Well, GLD and SLV, I look at as the worst products on the planet. And if you were to read the perspective of GLD and SLV, pages 6 through 12, titled Risk Factors, and really read it and read it again slowly and sell it like that. And it's bad. They distance themselves to great lengths from the custodian's liability. The custodian distanced themselves from the liability in the respect that they say things like, the custodian has the right to use sub-custodians, but is not responsible for the errors and or omissions of the sub-custodians, that the custodian does not reserve the right to visit the premises of the sub-custodians, that if the sub-custodians are holding bars that don't meet London good delivery standards, in other words, a 400-ounce gold bar, maybe they have a lead bar painted gold, it's not their fault. And if that happens, they freeze the account at that point and do an investigation. Well, an investigation could take years. In the meantime, the price of gold could go to the moon, and you get when the case is resolved, you get the price of where it was at the time it was frozen. And these are just from memory. The prospectus is amazing. You can see why, prospectus attorneys get paid $1,000 an hour, because no one reads them. And if you really were to read it, you would sell the damn products immediately. Now, when you talk about PSLV and PHYS, you're talking the Sprott Physical Trusts. I have worked with Rick Rule, and first it was what the heck was the name of his company? Before he was Sprott, he was, well, I guess it doesn't even matter. Global Resource Investments. That was 20 years ago. And then he got bought by Sprott, and now he sold Sprott. I still work with the Sprott folks. I've worked very close with them for a long time. And I think in the world of paper, PSLV and PHYS are the finest vehicles you can own in paper. They're backed by gold and silver. They're held by the best name in the business. They're held primarily at the Royal Canadian Mint. They're also closed-end funds instead of ETFs, which are proxies. A closed-end fund means it's eligible for capital gains rate, whereas the ETFs like GLD and SLV are taxed at the collectible rate of 28%. It's a better play. And you can take possession of the metal out of the Sprott funds, although it's very impractical. That's the one knock against it, I guess. I mean, it's great that it's backed by it, but in order to take silver out of PSLV, you need to take 10 1,000-ounce bars, no less, 10,000 ounces in 1,000-ounce bars. And in PHYS, it's a 400-ounce gold bar, which is, again, very impractical and impossible. Once you own it, you can't move it anywhere. You can't ship it. You won't find anyone that'll be able to insure it for you, short of Brinks. So, what do I think of it? I think in a world where you have to have paper, PHYS and PSLV are by far the best. But I would never own ETFs in place of physical precious metals. As far as the ETFs that have the mining shares in them, the index, yeah, I mean, I think you can make an argument for that and even the junior index. If you took every single mining share on the planet, Jesse, and gave it a value, or what's called a capitalization, it's less than that of Coca-Cola. So if everyone who owns Coca-Cola sold it and wanted one mining share of something, there's not enough to go around. And so, yes, I think it's great, but I also will tell you that mining shares are stocks. And if the water is pulled on the plug is pulled on the water of the tub, all of the stocks are going to fall, even those that are floating on the surface. And the gold and the silver physical will be sitting on the ledge above the water. And it will look like gold and silver are going to the moon, but they're not. It's just that the dollar is collapsing. The markets are collapsing. So I would say to you this. In a pyramid philosophy that the Swiss have used for 300 years, the base of your pyramid, call it 60 or 70%, would be physical metal, would be paid for real estate. I used to say cash in the bank, but it's dissipating so quickly. It's hard, but let's just call it cash. The middle portion of the pyramid, I used to say treasuries because they used to pay a fair rate of return, but now you're going negative with treasuries. But let's just say the middle portion would be treasuries, something throwing off a little return, or utility stocks paying a dividend, or a stock like Procter and Gamble paying a dividend, something conservative that is going to throw off some dividend. And then the top 10% would be your cryptocurrencies and your mining shares. So while gold and gold shares are first cousins, they are very different in terms of their risk profile. And to me, physical gold is wealth. Mining shares are a speculative investment. But I'll tell you this, you can make more money on that top 10% than you can on the base 60 or 70 if things go right. The leverage is fantastic, but the leverage cuts both ways, not just up, but also down. So yes, there's room in every portfolio for some mining shares, but I would not categorize them in the same column as I would, or the same portion of my pyramid as I would the physicals.
What's your thoughts on what many would call more non-traditional precious metals like platinum and palladium? Do you think there's any value in holding physical platinum or palladium?
To me, they're tertiary at best. Both of them are used primarily in catalytics. And so they don't have the historical recognition that gold and silver do as preservation of capital. So, yes, there is room for them, but I would say it's more of an investment than it is wealth to me. And I wouldn't touch it until I had a nice position in gold and silver. Now, you could make a strong argument that platinum is woefully undervalued, and it is. But here again, I would say that gold and silver are wealth, platinum and palladium are an investment. And that's just the way that I would choose to look at them. But there is an argument to be made, and another argument being that the majority of the mine supply comes from Russia and South Africa, both of which are, not the hotbeds of a political or geopolitical stability. So, talk about potential based upon lack of supply, sure. But I think the focus here is not about return on money, it's return of it. And for me, I focus more on gold and silver.
So if someone's listening and they're new to the precious metals space, just getting started, what would you say are the best first steps to take? Is it to just get some bullion in your hands? Would that be the best way?
100%. And be conservative about it. Buy things that are not rare and esoteric. Gold bullion, silver bullion coins or bars. Don't be penny wise and pound foolish. I don't think there's greater value in 1,000-ounce bar versus 1,000 1-ounce coins or bars or whatnot. You want to have great liquidity and flexibility. You can have the greatest thing in the world, but if it lacks demand or divisibility or functionality, it's not so great. So yeah, gold and silver eagles or maple leafs or kangaroos from Australia or 10-ounce or kilo bars, which are 32.15 or 100-ounce bars. I mean, there's a million different ways to do it, but stick with things that are conservative, that are liquid, that are sought after, and keep it simple. I mean, you don't need to get fancy numismatic coins or collector coins. That's better suited for when you have a better understanding and you have a big a stash of bullion underneath it. And that would be the way I would advise my best friend or my best client.
Well, Andy, this has been an amazing conversation. It's been a masterclass. I'm really looking forward to going back and watching it again and listening. Could you introduce us? You talked a bit about Miles Franklin in the beginning. Where can people find the company online? And also, where can they reach out to find you online as well?
So we have a new website that seems like it's been an eternity under construction, and it is being built, and that's milesfranklin.com. In the meantime, I'd like your listeners to send me an email at info at Miles Franklin and say Jesse sent me, and I'll make sure they get the best price in the country. We'll answer their questions directly and send them an updated inventory. You'll find our prices are as good or better than anyone in the United States. We might be the only major licensed and bonded company in America. Minnesota is the only state in the country that mandates regulation and licensing and bonding. And although I moved to Florida, where we've had a satellite office for a decade, I left my corporate office in Minnesota because it's the only state in America that makes you be licensed and bonded. And just about every country in America has boycotted Minnesota because of it, because of the bonding, because of the continuing education and the licensing requirements. They just work in every other state. What it means is, on top of having what I believe is the best reputation in the industry, including US Mint accreditation, we're accredited and bonded by the state of Minnesota. In what is a federally non-regulated precious metals industry, we are held to a much higher standard. So send us an email, info@Miles Franklin. Our new website will be done by the end of the summer. But until then, Jesse sent me, we'll ask any questions, we'll reply, or I'll reply, get the questions answered, send you an invoice, make sure your listeners get the best price in the country, and make it a good experience from start to finish.
Well, thank you so much, Andy. We'll have to have you back on again in the future to continue the conversation.
I'd love it. Anytime, please feel free. And in the meantime, I hope you and everyone out there has a great day and stay well.
If you enjoyed my conversation with Andy Schectman, you won't want to miss my interview with another one of the OGs in the precious metals space, Mr. David Morgan, where we discuss silver's role in the Great Reset, how silver may be superior to gold as a monetary metal, and what it will take for silver's true value to shine through.